Welcome to Subramani. I'm going to talk to you a little about macros and little about what I like in the Indian markets today. So look at the macros. The US dollar is at a very strong stage of its life. Though all indicators are it should be weakening. What is the reason for the strengthening of the US dollar? I think it's very simple. Again, flight to safety. When there is uncertainty in the world, you go to the US dollar. This is a very old theory. I do not know how long it will hold, but as of now it holds. And when the British pound took a beating, chances are more and more money left even the British pound or any other place and went to the dollar. I think you should see this more as a weakness of other currencies. Nobody would want to keep billions of value in the yuan or in the yen or in the rupee or any of these currencies, right? These are not big, strong economies. So these are not places where people would like to come and keep their money. So the other avenue, of course, is gold. Gold is not showing any great signs of buying. In fact, gold is pretty weak now. So the dollar is very strong, which is not good news for the US. But the advantage for the US is when they have a strong dollar, the whole world will want to supply material to them. That itself will act as a big check on inflation in the US. So in US inflation, more likely now to be seen as temporary, simply because the whole world would love to sell their things in the US, simply because the dollar has also got stronger. So anybody who is supplying to the US is today very happy, whether he is a software supplier or whether he is a supplier of shirts, pants, whatever commodities they want. So if the US consumer wants to buy, the whole world is willing to supply to him. That is itself a great reason why inflation in the US is not going to be very high, or not going to be very high for a very long period of time. Other indicator is, of course, the US 10-year GSEC is not above 3.2, right? 3.1, 3.2. So if inflation is 8%, and if people believe that inflation is going to be 8% for a long period of time, the 10-year GSEC or the US GSEC would have gone up much higher. These are good indicators that inflation in the US at least is not going to be permanent. So of course there are people who say the 4% rule won't work with inflation so high, but I still do think that looking at the numbers in the US, inflation looks temporary. So if the inflation is temporary, chances are a lot of money will flow in, a lot of goods will flow in, and because the dollar is very strong, the Americans will find it cheaper to import goods. So exporters in the US may be suffering because of the strong currency, but there is no reason for us to worry about it. But of course, I know there are many Indians who sit and worry about high inflation and bear market, which is true in the US. It is not so much true in India, right? India inflation is high, but our GSEC is very close to it. If inflation in India is say 8%, and our GSEC is at 7.1 or 7.2%, then we are not very badly off, because we will also be able to combat our inflation better. And I don't see interest rates going up too much higher. Maybe it will, but the cuts will start in 2024 for sure, if not in the last quarter of 2023. Emerging markets, however, is different. When you say whole of emerging markets, the Indian market stands out in terms of very good performance, which is actually, you feel it's a feel good and a feel scared kind of an situation. Emerging markets are down, I think 20-25%, and even emerging market debt is also down by 10%. So it's an attractive way for people to put money, but this flight to safety, which means all the money is going to US, maybe it has played out, maybe the money will start coming back, but as of today, emerging markets look far more attractive. Even the US equity markets will start looking attractive, because the equity market, the small cap is not looking too bad in the US, but largely the money flows into the large cap. The large cap is still iffy, and if the dollar is going to get stronger, then your returns will anyway improve. So all those people who have invested in US markets, this is not a time to be too much worried. But however, if you're worried that the S&P is going to give a say minus 10% return next year, and the dollar is going to appreciate by maybe 10% against your currency, you will be at zero return, right? So have a look at that. Emerging markets have lost a lot of money, anything between 10 to 20%, including the debt markets. So, and the US dollar has peaked. Is it a great time for the US dollar to come into the emerging markets? Maybe yes. Does it mean it will come into the Indian markets? Maybe yes, maybe no. Maybe yes, because they may not have too many opportunities outside, and maybe yes also because they have taken the money from this market, right? So whole of 2021 22 for sure we saw a lot of FII outflow happening from Indian markets. Will some money come back? Yes. But are there more attractive markets in the world other than India? Yes, from a valuation point of view. No, from a growth point of view, right? You need a big economy to accept a lot of money, and a lot of money is likely to go into Indian manufacturing, etc. So India will absorb a lot more capital than many other markets will, right? You can't take a very small market and say I will pump in so much money. That market won't accept. Indian market will accept. So Indian market might attract more money. But is Indian valuation at some very low levels? I would say no. Some industries are attractive for sure. Like say, if the problem is for most of us. Let us say I tell you that the pharma industry is attractive, but pharma industry is today very complicated. You do not know whether to buy a formulation. You don't know whether to buy a company which is selling in India or which is selling abroad. Should you buy a hospital? Should you buy a diagnostic? So you're better off actually in a fund which is a healthcare kind of a fund which takes care of diagnostic, hospitals, pharma, or in a pharma fund, because I do think that they are yet to play out. They just started, so they will play out their whole range. So pharma looks attractive. It's customary to say the financial services looks attractive. It is true because there is a jump in the amount of money that people want to increase their business. I just spoke about a rising, the very strong dollar. If the dollar is strong, it is fairly obvious that Indian software company, pharma companies and any others who are exporting to US will want more working capital, will go and borrow money and put up a new plant, etc., etc. So that is happening. That there is some green shoots in capex, but I've been saying this for a long time. So you please take your own decision, ask your financial advisor. I see capital markets, the green shoots. I think pharma is not too badly priced. This is very clear. But having said that, I wouldn't know which company to buy in capital goods. I'd rather put in a infrastructure fund rather than put money in particular shares. I really don't know which shares to buy, both for pharma and for capex, right? Capex infra. If the US dollar is strong, is it good that the IT companies will also do well? Well, IT companies may or may not do well depending on whether their customers are doing well in the US. So if the US economy itself doesn't do too well, then the IT companies may not do well. But whenever I invest, I keep asking myself one question: what if I am wrong? So what if I am wrong guides my principles. So I still hold TCS, Infosys, Wipro, HCL in my portfolio. Make no mistake about this. I am not saying, oh, IT is not going to do well, pharma is going to do well, sell that and buy pharma, because I don't even know what to buy in pharma. I have some pharma shares like Sun, Lupin, Glaxo, Pfizer in my portfolio always. It doesn't matter to me whether the pharma is going up or going down. But I may ride the pharma through a fund rather than doing specific shares, because I really don't know which shares to buy in when pharma industry is doing well. Should I buy diagnostics? So therefore I would stick to that. Having said that, will the US, one more thing which is happening in the US is the housing market is not really growing at a fantastic pace, whatever people try to tell you. I don't see housing booming in India also, though every TV channel and every talking head wants to tell you that, oh, the real estate is booming. I don't see real estate booming. I don't see rents going up too much. I don't see younger people committing to bigger houses and committing to 20-year loans. I don't really see that happening in a big way, but everybody is talking about it, so obviously I am missing something. But the US rents, or rather the US EMI rates have gone up dramatically. Their interest rates have doubled, and that is going to make affordable housing very difficult to gauge in the US. Even in India, I don't think affordable housing, which means something like 50 lakhs to 2-3 crores is what people call affordable housing. I don't see too many people committing to that. I mean, I may be completely wrong, and that's the advantage of running a video channel and saying, look, I could be wrong. So where are we in terms of valuation? I don't think we are at a very cheap level. If you have your SIPs, you should continue your SIPs. This is also a good time for people above 60 or 65 to commit to a fixed annuity. It's a good rate that they're getting. I found that one of the insurance companies is doing an annuity today at 7%. 7% is not bad. I'm sure interest rates could go up further, but will companies sell annuities at a higher price? I doubt it. Will you get an 8% annuity in this country? I doubt it. 7.11 maybe. If we are already at 7, do you want to wait for that 0.11 and run the risk that it goes down by 50 basis point? If the sales increase too much at 7%, they will immediately cut down the rates, right? So it's a dynamic thing. So today, locking in at 7% is not a bad option for people who keep money in bank fixed deposits. This is a better option for a 20-30 year kind of a commitment to, depending on your age. That's it, my take on the state of the economy. Thank you. Why India is likely to outperform the outside world or the outside market seems to be very simple, that we have our economy doing well, we have your PLIs taking off, our GST collection is good. These are good indicators that the economy is doing well. We're seeing some offtake in the banking finance. I am seeing a lot more business for credit rating. So you see a share price like CARE moving from something like 400 to 530, 410 to 530. So you see some of these signals that the Indian economy is doing well. I'm sure the BFSI sector will do well. This is at the same time when China is fighting with a falling currency. The yuan is crashing, one of the worst things that has happened. Will they be able to sell dollar and buy more yuan? They should. That will really help the dollar also cool off. So that way it is good. But still China has a lot of problems. So first problem with China is many parts of China are battling with COVID, right? So whether it is Shenzhen or Tianjin, both these places are suffering because of COVID. That is cutting down on manufacturing possibilities. So if factories are shut down, if cities are closed down, chances are some of the manufacturing will want to move to other countries. So China plus one is working. China plus one, will the second be India, Vietnam, East Europe or US or whatever? We don't know. Some parts of the many parts of the world today are pretty cheap to manufacture, right? So some of the manufacturing will shift out of China. That is one bad news for China for sure. China is not really dealing with too much of inflation like the US or UK, but it is definitely having problems with their real estate sector. And the general feeling is Beijing is not doing enough or is not able to do enough. Is Beijing going to spend a lot of money on infrastructure and keep everything look hunky-dory to the world? I don't know. We don't know whether Beijing is really doing enough on that ground. So that means people would be scared to say, oh, if China hits a recession, what happens? This is a question which we have been hearing for the last 20-25 years, but this time it could be, it may not be so bad, but it could be bad news for the foreigners, right? So some of the foreigners might start running away, but Beijing, they get a feeling, is just not doing enough. Beijing did announce some 1 trillion aid for small businesses, etc. But it's not seeming to work. People are not spending enough on food and other items because they are just climbing up, they're saving, clamping down on their expenses, right? That's what they're all doing. People are afraid to spend. Once people are afraid to spend, amount that you pump in will not matter. Now this is all at a time when the Chinese construction and development or the real estate market seems to be in real bad shape, right? People who have bought can't sell, further loans are not being made available so easily. So if the real estate is not going to go up like it normally does in China, that could scare people because that wealth effect is lost. If I don't think that my real estate is appreciating, then I just curtail my expenses. So that is what is happening. The Chinese attention to their weather has not been too very great. So parts of China have gone through a drought. Some parts may go through a flood, but some parts have gone through a drought. And when they've gone through a drought, they've gone through very high temperatures. So when you have high temperatures, you need air conditioners. So when you put air conditioners, it increases the heat. And if those air conditioners are running on hydroelectricity and there is a water problem in those parts, then from where will electricity come, right? So these are all questions with which China is really grappling with. So China may not be able to attract too much of investments and their attention. Another thing which China did was to its tech entrepreneurs, it just took them and somebody is completely lost. I'm not naming them because they'll say, oh, yesterday he came here, yesterday he went there. But fairly obvious that anybody who is invested in those companies, those Chinese companies, would want to remove their money, because you'd never know when the clampdown could mean, okay, you can't, if you are a foreigner, you can't withdraw money. What happens if that man makes such a rule, right? So that is scary. So because of all this, there will be less money going into China. That means more money is available in the emerging market basket for India and other emerging countries. So definitely India is going to be a beneficiary of this. But yeah, China plus one story is something which India will have to cash in as well as anybody else. It is definitely China plus one, but for India to be in that plus one, we'll have to make in a lot of effort. Thank you.